That goes microphone as well. I think it does.
So you having Netflix and chill tonight, yeah?
Yeah, man. There's a new. I can't remember what it is. There's some new movie on. But basically, I was getting the whole. You've been working all weekend. You're always working. I'm like, yeah, I know I'm always working, but look, you got to get on that grind, don't we? Got to get on that grind. Right. So I'm basically just going to kind of pick up from where we were yesterday, guys. Just so you know, I'm using two screens, and it's a pain for me to keep switching between. So my chart is going to be off over here. I'll fill it out, and then I'll do a screenshot of what the findings were. So you won't be seeing me filling it out, but it just means that I don't have to keep flicking between screens all the time. I'm just going to kind of chip away at it. I'm going to do about 20 minutes of back testing and just kind of chip away at the charts and see what we find. And then I'm going to record my market breakdown video with you lot on the call as well. So you'll see the market breakdown as I'm recording it. And that will obviously go live on YouTube tomorrow morning. So let's kind of get into it. So I'm going to mark out GU. GBP USD works quite well. And one of the things that I quite like to do when I do this is use this kind of vertical line. Now, I would suggest, to be fair, making so you've got this, what you're looking at here with the color scheme and the charts and all the bits that you can see. This is called a layout in TradingView. It's called a layout. Now you can make a copy of it. What I would suggest that you do is that you have a back testing copy, which is my one down here. I'm using it on this one just to kind of show you guys what I would do. In fact, you know what? Let's show you, okay? I'll make a copy of my layout, okay? And we're going to call it Let's Go Backtest. Get that saved. Okay, what this does is literally just copies it. So everything that's on my layout, that's my Bitcoin trade from earlier. Everything that's on my layout is still there. So if I now go over to my pound dollar chart that I was just looking at, we should have that red line on and those boxes drawn out. Okay. Now in the top here, you can see there is a top one and a bottom one, which is recorded at the moment. Let me just close that one down. I think we'll lose that recording. Okay, well, I'm going to keep it on here because otherwise we'll lose the recording by the looks of it. Okay, but you can see the point of it. Can you see when I switch screens? You can see that, can't you? Yeah, because I'm sharing my screen on. Yeah, I'm sharing my screen. Okay, fine. So you can see that. You won't be able to see it on the recording line. Anyway, so on here, ultimately, this is as far back. So if I go down to the 5-minute chart, it only goes back so far. And as you'll see here, when you're depending on what time frame you're working on, I mean, look, if you want to backtest the 1-minute chart, you're going to have even less data. So the 5-minute chart only goes back to the 17th of July. So I draw a red line. That's as far as I can go. If I try to go down to the 3-minute chart and then I try and replay that, it doesn't let you. It kind of, I'll show you what happens. You press replay. So let's say I want to go back to here and I want to use the 5-minute chart from here before that red line. It won't let me. It shouldn't let me anyway. Yeah. What's going on here? I'm lost now. Do you know what it is? That's weird. What's going on here then? What's going on? Right, those are our lines. Oh, something's not right here. Basically, the lower the time frame you go, the further you can't go back by, if that makes sense. Let's just try and drag this all the way back and see where we are. Yeah, you can see we've got no data there. Where's that? That's May. Okay, so we can actually get back to May, to be fair, by the looks of it. Let's just leave another red line there. Let's see what's going on here, boys. All right, let's put a line in there. Let's go back to the hourly. Okay, so we've got 2 now. Right, okay, let's try that again. So let's say I want to replay before here. On the hourly, that's absolutely fine. If I go down to the 5-minute chart, what is going on? It's letting me. How far back can we get then? What if I go to 3-minute? Right, okay, see that data point unavailable. We don't have historical data for this resolution for this far back in time. So you've got to kind of, when you're up to date with your back testing, the way I would suggest doing it is just do like the last week. So you can, every Saturday and Sunday, you can just pick a pair, and on Saturday you're going to do the last week of trading, because if you're trading off kind of 4-hour or 1-hour zones, you'll get through a week pretty quickly. You're probably going to find 5 to 10 trades tops, and you could probably get through a week's worth of data. There's no reason, let's say if you've got 4 pairs that you're trading, there's no reason you couldn't do all 4 of those pairs over a weekend. And then what you do by doing that is you keep yourself up to date with the marketplace, you keep yourself current, which is also quite good. All right, let's just stop this video. Okay, so let's go from here. So when you've got your data point wherever you're entering from, okay, I'm gonna trade kind of the 1 hour zones, but I would trade your plan however your plan is. Okay, I've got a few zones marked out that are points of interest, and I've got my recent structure change. So one of the things that is really worth understanding, and I recorded this in a little video a little while ago. Okay, up until that structure change, that break of structure, this is in a downtrend. Yeah, everyone with me? Yeah, okay. So these supply zones here, and I'm popping out a video on supply zones in the next 24 hours, this will make sense, but these supply zones, these point of interest here, these are all valid areas that we can look at for sell opportunities, okay? And, you know, that one there, for example, that one's been traded through, so that's why I haven't marked it on, but that was a valid supply zone. You know, this here kind of was a valid supply zone, but again, it's been traded through. I'm obviously not marking anything that's been used up because once these supply zones are tapped into, they're dead. Okay, so I've marked out the ones that are left untested. These have all caused a big reaction. These have all broken structural points to the low. Okay, broken structure, broken structure. These have all continued our trend. Okay, another one there. Okay, and that technically is another supply zone there, so we should mark that one out as well. Okay, however, this latest swing high here, okay, which again in itself was a supply zone, okay, we would have been looking for sells from that. Okay, we would have been looking for sells from that, and you can see it's been traded through. Now this is now a major breaker structure. When we have a major breaker structure like that, the trend bias changes. Okay, and what happens to these zones is whilst they are still kind of valid and they will probably cause some kind of reaction, the ones we want are the higher time frame swing points now, because this trend has now changed. So if we're looking at just our higher time frame swing points, okay, these are there. Oh, shit, right, okay. And then we frame our last high to low. That maybe it might be up there, whatever, it don't really matter too much. Okay, we frame our last high to low, and we mark out premium discount. The only sells we're now going to validate would be these ones. The only ones we would consider would be these ones. These are the only zones that we would consider for sells now, and these would be higher time frame shifts if we do get them. So we keep an eye on these other zones, but these are now classed as weak zones. And what they're probably going to do is they're probably going to cause reaction for us for price to come back in and tag into a demand zone. What's happened now is we've had a major breaker structure. That major breaker structure tells us we want to go buy side now. So what we're looking for is we're looking for buy side entry positions only. Okay. So this is a real good way to kind of mark out your zones. These were all valid, which is why they were blue. These were all valid until that structure changed. As soon as that structure changes there, okay, and we're now buy side, that's a major breaker structure, these become invalid. Okay, we can still consider them, and you might get some shorts out of it, but the potential for that, because the structure has changed, you may get a short from here. It looks like it's probably going to give you a short, but the potential for that is there. Okay, that's shit. You don't want that. Whereas, you know, the potential from here when we were in a downtrend, let's say price had come back and traded into that, the potential for that is, you know, it's open-ended. So making sure your trade has high potential is really, really important as well. And if you are going to be trading these counter trend moves, they're more advanced. You've got to be more careful with them because there is absolutely nothing stopping price doing that. Okay. Look at this move here. Okay. Let's say you had bought here and you were hoping to trade into the supply. So right here now we're on a downtrend still. Yeah. Okay. We want to buy from here. We see this nice setup. It's not a bad setup, to be fair. Raid, break a structure, return, okay? And we want to buy from here, expecting us to touch that supply zone. Well, you can see it didn't do it. So when you're trading counter trend, you have to be prepared for the fact that you may not even get your first target, which would have been there. So that, again, is something that we just got to be conscious of, okay? If you're trading counter trend, you might get down to here, you might get down to here. But that really is best case scenario. And let's say you had traded that, and you've taken that trade, what you're getting out of it, maximum of like 2R. That's not enough for me unless I get a really tight entry. Let's have a look. So we've got a raid there. Okay, we've got 3 pushes, 1, 2, 3. So that's our validated setup. That's technically a raid. That third push is a raid of those highs, and we have had a push down. We've had some kind of retracement there. So that's our kind of 50% zone that we'd be looking for. So we might be able to get a trade from here. Let's see what happens. No, it's not going to give us one, I don't think. Maybe. Looks like it might be going from here instead. So that kind of is a, you can see, you know, not the best of setups, is it really? Let's see what happens. Let's take that trade, okay? And when you're doing your back testing as well, boys, you know, you got to trade it like it is live markets, okay? So when you see price come into here, pause the back testing tool. So this is the replay tool I'm using. Have you played around with the replay tool? Do you understand how it works? Okay. Play around with it, okay, and get used to using it. But this is basically how it works. If I was trading that counter trend, we've got this big zone underneath. I'm probably going to set a double entry here. I'll do this sometimes. Stop above the zone, okay. I want 1R to there, and I want 1R to there. So let's just see what happens, okay? Because this might hold, but it might also be swept into here. And sometimes we've got to take that calculated risk and potentially take 2 trades. Yeah, so stopped out there, so we can get rid of that now, get rid of that now. So now, just so you know, okay, that goes across onto here. GBP/USD, what time was it? Time was about 4 a.m., so I wouldn't have taken that trade anyway. Okay, 4 a.m. Entry was a 3 push break. Stop was 9.9. 9.9. And we got a -2. Okay, next entry. Let's see what we get. Plugged in. Okay, so first trade comes in. What time is it in the morning as well? Tagged in at 5 a.m. I doubt we've even got into that one either. So really, because you're trading, you know, round the clock when you're back testing, really you are, you know, this is why you want the really high success rate on your trades. So 3 push break again. Okay, wider stop on that one, 16. We got 1R, so that's 0.5. Okay, 2 as well. Not yet. Okay, so that's at break even now. Okay, so that's our 2. Oh. And then the next one is going to be a structural point. So once I've got my 2R out, okay, what I'm normally looking for is a structural point. Now, the whole point of the setup, there was a counter trend move, wasn't it? Okay, so our next structural point is down here, which is quite nice to be a fair 4.8. This is at break even now. We've taken out of the trade, so we've taken out of the marketplace. What does that work out at? Sorry, 2 seconds. I've forgotten now. We've taken out 0.5. So we've taken out 1.5 out of the market now. So we're pretty happy with that, to be fair. You know, that if you're trading at 1%, you've taken 1.5% out of the marketplace. But remember, we're still down 2R from that earlier trade. Okay, so total now is kind of this. So let's get that saved. See what happens. Now, this, you know, you could have seen that as a re-entry. Now, time of day, I've been watching that all day long, okay? What I would have probably done, technically this is a missed trade now. What I would have probably done is drawn that on, because I wouldn't have got into this trade because I would have been asleep, obviously, okay? I would have probably drawn that on, something like that, and I would have looked to set up, because this is a morning move. We've had a nice push down in the morning. You know, I would have probably looked at a setup, but you can see, you know, see how mucky this is. And this is because it's a counter trend move. The pressure, remember, is for the buyers. The pressure is for the buyers to come into the marketplace. So these counter trend moves, they often fuck about like this, and that's what you got to be careful of. Let's see what happens. So that would have taken me out. That would have been another 2R there out. Okay. So by now, and that one was taken at 8 o'clock. Okay. So by now, that is it's just a re-entry. That's just you call it, it'll be RBR 50. Okay. So by now we're back in profit, which is great. Okay. And to be fair, we've probably not taken either of these trades. So we're probably just in profit, whatever. Okay. And you'll start to find out there's certain times to trade. Do you know what the best time for this style of trading? Do you know what the best time of day to trade is? Yeah, basically. So when the market opens in the UK, which is at 8 a.m., okay, this is where you'll normally get, what will normally happen is you'll get what's called a Judas sweep. It's an ICT concept, and it's where the market pushes up before reversing in direction. It's a manipulation move. What will normally happen is this. Okay, that's pretty normal. It will sweep out all of these highs. It hasn't done it, but keep an eye at 8 o'clock in the morning. Watch what happens to price, especially on the majors, like the big majors like GU and EU. Watch what happens to prices. Always move like this. So let's say price had done this, okay, and raided. Well, all this does is it creates a new supply zone. So what we'd be waiting for is a break of structure and a return. Okay, it hasn't done it in this instance because we'd already had that big push down at like 7 a.m. But, that is look at that move there. Look at how impulsive it is. Look at the imbalance that it's left behind. That's a really nice zone that we're going to be looking at trades for. So, I would have seen this about 7, 8 o'clock-ish, and I would have set an entry there, expecting this to go down. That's if I was trading counter trend. And there's so many other factors that, I don't know what trade, what other trades I would have been in. There's multiple factors, which is why when you're back testing, your trades have to be really, really accurate. And you've got to have a really good strike rate as well. Okay. So that would have taken us in and we'd have been broken even then. So look, we're now at a total, let's say we've taken all of those, okay? We've taken those 3 trades, we'd have been now for the day up at 1R, okay? Which if you're trading at 1% per trade, that's 1%. If you're trading at 0.5%, that's 0.5%. You know what I mean? You only need like 2-3% a week is all you really need. Let's say you've got a target of getting 1R per day. And, that's all you need, because if you're trading with a prop firm, you need like 8 to 10% total. Well, if you can take these trades and you can get 1R a day and you do that 4 days a week, that's 4% in 2 weeks or 2.5 weeks. You've passed most prop firms. What people often do with these prop firm challenges is they get really, really greedy and they want to pass right now. And they want to pass it in one trade, and it's just ridiculous. They give you 30 days for a reason. These people that pass these prop firm challenges in like a day, they never keep their accounts because they're not actually practicing what they do unless they're really experienced. So I try and use all the time up. I try and at least make sure I trade over a couple of weeks to pass any challenge. All right, let's see what happens now. So unfortunately, we missed the bigger move there. Now, there's a couple of things that you could have argued here. Okay, that is a raid out. So we might get another move into here. In fact, I'll draw that out. Okay, this trade is now dead. I should probably just mark it on. Give me 2 seconds. All right, let's get a screenshot. Oh, screenshot there. Okay. Now we missed a big move, unfortunately. Okay, that's just one of those things that just happens, unfortunately. But let's see if we get a retracement into it. No, that's gone.
Would we be looking at a buy now?
Yeah, probably. Now we've tagged that zone. That would have been a shame to be missed out on that. But look, you've got to trade your plan. Some people will, don't move to break even, and they would have caught it, and they would have caught a great move. What often happens, and this happens all the time, is people see stuff like this, and they're like, oh, well, if I hadn't gone to break even, I would have got a massive trade. They forget the fact that there are also lots of other trades that they get stopped out on at break even, that these other people get stopped out with a full loss. So there's pros and cons to both approaches. Personally, I like to take my capital off the table as quickly as possible. Okay, I want that capital off the table as soon as possible. Okay, so when I get 1 hour out and I'm taking my half an hour off the table, I've got some profit and I'm at break even. At the end of the day, if I take 5 trades in a week and I get 1 hour on those 5 trades and they all go to break even, I'm 2.5 up. Yeah, and 2.5 at 1% per trade is 2.5%. If you do that over 52 weeks, you get 2.5 over 52 weeks, 130%. What investment company do you know can give you 130% a year? You know, it's not there, is it? We're losing 5 to 10% on savings a year. The way inflation and how money's going these days, we lose money on our savings, even if you got half of that. So you see what I mean? Like, let's say you just took a 1 hour trade a day and you got 0.5% out of that 1 hour trade. You're making 130% per year. You're passing any prop firm challenge. You don't need huge R. You don't need massive trades. If you take a 1 hour trade and you win that every single day, then you're laughing. You're absolutely laughing. You will have, if you, let's say, well, over a month is that, what's that? 20. That's 10%, isn't it? 10% in a month. If you spoke to any of your family who've got a bit of cash and you can say, look, I can give you 10% a month on your investment, they are going to fucking throw cash at you. They are literally, you are going to be spoilt for money. If you can offer 10% return on anyone's investment a month, you are going to be, spoilt for investors. Do you know what I mean? And that's on just a 1 hour trade. So what I'm always looking for is I'm looking for a 1 hour trade. If on my setup can get to 1 hour, then I'm taking profit out of the marketplace. And that's why, I talk about quite a lot how I want to make my kind of my course and my strategy as simple and as easy to understand as possible. Well, all you see on Instagram these days and social media is these massive trades and these 100-hour trades. Who's catching those, honestly? And why do you need them? Why do you need them? These people, they might be catching 100-hour trades, but they're probably taking 20, 30 entries before they catch them. I can't be fucked with the stress of that. I can't be asked with that. I want to get in one decent trade, get my 1 hour out, and if that then runs to 2 hour, great, I get a bit more. If it runs to 4 hour, I get a bit more. And if I get my home run, which is 5 to 10 hour, I'm cool with that. That's great. One of those a week and I'm done. So, you don't have to be trading all the time, and getting these really nice entries where you're going to get 1 hour out and take some profit off the table, set yourself to break even. If it comes back to break even, give a shit. Who cares? It's done. You got some money out.
Yeah,
You still made profit, isn't it? It's like, when you boys ever been to a casino? Do you? Have you ever been though? No? You've seen. Okay. So, say again. Watch the movie Casino. Look, I've never been to a casino. Okay, I've never been into gambling. It's not a part of me. I don't like having. I don't like the fact that they have an edge over you. Okay, and for me, it's not a bit of me, but you revere in the big wins, don't you? You see people get massive wins and you're like, oh my God, that's amazing. And that's what sells. And you see that, in the movies and all that stuff. Professional gamblers, they don't make money off big wins. Professional gamblers who bet on horse racing or bet on football or whatever it may be, they will build their banks gradually with small, consistent wins. And trading needs to be like that. What you're doing is you're developing an edge and you're playing out that edge. And that's all it's about. Okay. So let's just see what happens here. Now we're kind of in this demand zone here. Okay. The bias obviously changes. Okay. We go back up to our higher time frame and we are now looking for buys ultimately. So let's see what happens. Okay. So we get traded right through. Okay. That's okay. We've got, let's draw out this range, remember. So the breaker structure created a new range. So we're going to draw up. All right, this breaker structure created us a new range. So although we've broken that, we may be coming down to somewhere in these lows. There's not really anything clean here. So you see how all this price action is all really mucky. For a supply zone to be valid, it needs to look like this. Okay. It needs to have a clear move down, taking out liquidity. It needs to have a clear move up. If price comes back to test it, so see So this is our imbalance here. Okay, that's our imbalance there.
The balance is just a straight candle moving either direction, up or down, without being interrupted.
Yeah, basically, it's like a blank canvas. That candle there, it hasn't been tagged. So the price, if you imagine how price prints, so moves up, moves up, moves up. Okay, it hasn't been tagged. Okay, it moved up there and then it came back down here. That bit has been mitigated now. That candle. Okay, cool. So we've had this push up here, and until this orange candle did anything, that technically was our imbalance. But as prices come back down into here, what's happening in these areas is orders are being fulfilled, and stops are being taken, and buys are being entered, and sells are being entered. So once the candle has moved back down into this section, any orders that were in that section have been fulfilled. So there's no point in the price has no reason to come back to it again. What we're looking for is unfulfilled areas, okay, which is this part to this part. That's our imbalance. And as you can see, price is obviously attracted to it. A lot of people have quite a successful profit-taking strategy just using these imbalances. I personally don't like it, but a lot of people do that, and they'll enter there, and they've got a pretty decent trade, to be fair. Okay, so a lot of people just use imbalances to buy and sell from as well. Personally, I like to use an imbalance in conjunction with the supply or demand zone. So that's our imbalance here. Let's mark that out. Okay, that's our imbalance here. This is, although it's mucky, this is a demand zone because it has pushed down. It has taken, see these two candles here, this one and this one. Okay, those lows were taken out by this wick. So that technically is a demand zone. So we mark that out. Okay, let's just change it to the right color. That's now dead because it's been traded through, so we can delete that. Okay, and keeping your charts nice and tidy is really important as well. The lower time frame is on a sell bias now, so we can't ignore the fact that there is a zone there we might want to trade into. Okay, so we keep an eye on that. And let's just draw on our rangefinder again. Let's see where we are. Let's try and get another trade before I do a market breakdown. So that is our new range to that high there. Okay, premium discount. And there is, that is an equilibrium zone. I wouldn't be trading from that necessarily unless I get a really good setup. This, however, is untested. Now, a lot of people will just refine it to that low there because that is the move down before the push up. I know that there's orders in there, and I know what price is like and how much of a bitch it can be sometimes. So we frame it down to there, okay? And then we're looking at this zone. So and there is technically another one in there as well, as you can see. So there's a few that we could look at. Okay, let's get rid of this rangefinder now, and then all we're going to do, now we've got our zones marked out. And this is what's the beauty of trading, is that once you get your setups and your structure right and you know what you're looking for, all you've got to do is wait. Mark out your zones. You just got to wait. That's it. That's it. You don't have to be watching it. What I would do if the price was here, I'd be setting an alert here like that, and I'd be setting an alert there like that, and then I just go away from the marketplace and just see what happens. And I'll maybe look at something else, and you can free up a lot of time doing it. So getting a bit of freedom from the charts is so important as well. We'll talk about that in one of the beginning to winner videos. Right, let's see what happens then. Right, so that went quick, didn't it? So there's no entries on any of this. You wouldn't have gotten into any of that. I mean, look, if you'd taken a risk entry there, let's say I was trading that. What time is that? 1 o'clock again. So we're talking about trading zones, 1 o'clock. So let's say you had taken this trade. That is technically a setup there. So we've got a raid. Doesn't really give you much confirmation. We've got a break of structure on this time frame. Break of structure. 50% move. Let's mark it up. 50% move. Order block strong. And when you're back testing, it's okay to miss trades. Just so you know, it's okay to miss trades because you want that strike rate when you're back testing to be really high. As long as the rules are being met, you know that you've got your edge. The strike rate won't play out the same in live markets, but ultimately this is going to give you a real clear understanding if your setup works well or not. So that would have created that. Our next zone would have been that. So this would have been a good trade, to be fair. Let's just mark it out. Where are we? So this is 1 a.m., 1 p.m. RBR 50. Okay, so again, just to talk that through. Raid, break a structure, return to 50. Okay, it's my favorite setup. It's so simple. You look for those things, you look for areas which are broken structure, left behind imbalance, have raided on the highs, broken structure, and you return to 50. And do you see how accurate that is? Like, I mean, if I put this on properly, it's exactly at 50%, isn't it? And that is because all of those orders are sat there waiting. They are sat there waiting, and that is where the average of the orders are. Okay, in this move here, that's a if we'd be on the lower time frame, we'd have seen that much more simply. And in live charts, you will see these setups. I missed that because we're chatting and we're kind of talking things through. But in the live markets, this is morning to afternoon, so you would have seen that setup. And that is something I've been like, do you know what? We've had this move down. We've tagged into this imbalance. The likelihood of it coming back and tagging this is quite likely. So when price is kind of down here, starts to move up, I'm thinking, do you know what? I'm going to set a limit order here. This is a quick move. This might have been a news-related event. What day was, hey Google, what day was the 21st of July, 2022? I bet it's a Friday.
It's Thursday.
It's a Thursday. So
July 2022.
There was some sort of news going on, okay, which caused that. But news, you will find, will do this. All that news does is it speeds up what's already going to happen. Sometimes it might take you up, the news event might have taken you up to here, okay, and then drop down. But it would have tagged that zone. It would always go to supply and demand zones soon. It will always go to supply and demand zones anyway. What may have happened is, had we not had the news event, is that it would have just, because technically that's a break of structure, isn't it? So technically that's a break of structure. So technically this is now the supply zone, and price did trade through it. So when you've got a news event coming up, if you are trading, always look at the two closest supply and demand zones, and usually the second will hold rather than the first. That's a really common thing during news. This is probably a news event, and let's say we had traded it, we would have got in with a nice trade. The trade is valid, so we mark it up. So we've got 14 pip stop, 15 pip stop. We get our 0.5 out, 0.5. We get our 1 out, we get our 2 out, and then let's have a look at structure. Let's see where else we're going to go. So it's a counter trend move. So my final target would have been kind of middle of this range, which is a 6.49. Let's see if we get it. Yeah, we get it as well. So 6.49. I'd have been fully out of the trade then. 6.49 will be 3.2. So 6.5, 3.25, 6.5, 3.25. Okay. So now, has this been one day or has it been a few days? It's been a few days, isn't it? Yeah, this has been a week. I think so. Because these were the first trades, weren't they? They were on the 20th, 21st, 22nd. So now in 3 days, 3 days, we made 7.8 R. And again, if you're trading 1% per trade and you caught all of these entries, or even if you're trading, that's 7.8% in a week. Okay, we're happy with that all day long. Right, boys, 7:05. I'm going to do my market breakdown. Do you want to stay on for it?
We have to shoot off now.
Cool. No worries.
We're on a short one. But,
Yeah.
You're gonna follow up on you're gonna post that online.
Yeah. I'm gonna get this recording up. This will be the next kind of backtesting video because there's some good things we've gone through today. I'll post it up online and I'll get the market breakdown will be live tomorrow morning probably. All right. Any questions?
I'm gonna probably put them on the group.
Cool. All right. Nice one. Cheers, boys. Great to see you again. Catch up soon.
Enjoy your movie.
Nice one. Cheers. Bye bye.